Hunters, last week wasn't the major move. It was just a warning. Trump's tariff threat against Europe shook the markets. Volatility spiked and weak hands were flushed. But today's where the real signal forms. I'm going to show you what helped, what didn't, why the next move looks like the last one. And stay with me because the last 2 minutes are going to be very, very important. And it's exactly what matters in this video. Right, so let's do a quick market snapshot and let's get grounded in the facts. The aggressive selling has paused. The markets aren't panicking anymore. There's reassessing happening. There's also major shifts from last week's emotional selling off. This was mainly due to a cooling off of tariff talks and some negotiations going through between Trump and the European Union or the European nations about Greenland. The European market is still under pressure, so equities continue to underperform against US equities as uncertainty still lingers in the European market. The US market are stabilizing but not bouncing. So we've seen only stability at the moment, and it seems to me like there is some positioning happening in major stocks like the Mag 7. Volatility remains elevated. There is important there is an importance there with the volatility. We have to monitor the volatility to see whether there'll be further sell-offs. It remains elevated. I would like to see it under 15, but institutions, I think, are still adjusting risk and rotating into different sectors. Crypto is no longer collapsing, it's consolidating. That's a liquidity signal, not a fear signal. Yes, we had a bit of a sell-off over the weekend and it looks fairly weak, but the consolidation continues. There is no longer panic in the market, and I feel like there is more positioning, accumulation, and deciding where the direction will go. When I talk about position, it could be bear or bull, and this is why we're going to be covering this in the rest of the show. Now, let's go into what I would say the main part of the show, the big hunt, essentially. And now here's where I think most traders fail. It's not about Greenland. The issue here isn't about Greenland. It's about policy uncertainty. Okay. So tariffs equal inflation, inflationary by nature. Then the markets immediately reprice inflation expectations when trade wars return. And this is the reason why we're seeing or we saw a major move in the markets. High inflation as a result equals yield sensitivity, and this again creates fear in growth stocks, and growth stocks will feel it first. So you'll see the Russell 2000 felt it initially and then bounced up again. Growth stock in the tech sector also ended up underperforming and selling off significantly last week. So today, what is happening today? Why today matters more than last week? Last week flushed out emotion. It flushed out all the fear. Today, it tells us where smart money is stepping back in. And here's the key insight for me. If there is real fear, yields would be collapsing. They're not. It tells me that this is repricing, not systemic panic. Okay. I feel like everything's going to get better. I feel like there will be a further move in the markets. And I think the charts also reflect this. Okay, so before I move on to the analysis of the charts, quick note here. I'm tracking volatility levels, key supports, and risk signals live inside my TrendHunters community. There's no hype there, just clear structure, execution, notes, portfolio breakdowns, and ideas that I share every day. The link is below. Join the community. It's a nice little community that is all based on my swing trading strategy. Now, what am I watching right now, and what do I want to monitor in the markets and share with you guys? Let's quickly share some insights here in terms of what I'm looking at. Right, so the first thing I want to look at is the Mag 7. As you can see here, I've noted that there's key pivot points right here and here. So 21st of November, 30th of December as a key shift between Mag 7 and the Russell 2000, rotations going in or capital flowing into Russell 2000. And then we have this significant sell-off in the MAG 7 stocks. What I will note here is it seems to me like we will get a move all the way up to 0.25 on this chart. We have actually, and we ended up getting a nice move on MAGs on Friday. So this is a chart that was taken, I think, Friday morning. We actually had a decent move all the way up to here, hitting the first level. I think we're going to go on to the second level as the rotations happen. The second thing I want to cover here was I wanted to cover yields. So with yields, we had a breakout, and I think we could be on a trajectory onto these higher levels of 4.4, 4.5. We also have US oil, which I think is looking like it wants to go all the way up to 70 or 72 here on this move. We've had the initial breakout from the trend lines, and we're creating higher lows and higher highs. And I think if we end up breaking above this level here, it's almost a certainty that we end up going to 70. And this is obviously triggered by macroeconomic factors at the moment. But it looks very nice. And it could, I think, maybe a few days of consolidation, as long as it stays above the 59 level, this level here, I think it's okay. And then we can move all the way up to 70. We also have a market that was broadly selling off, but again, you're seeing these MAG 7, these bigger companies being bought up, even Nvidia a little bit, Apple a little bit. We had Microsoft, Meta doing well, Tesla as well. So yeah, we are seeing that rotation happening. It's not to say that Russell 2000 will sell off completely, but the rotation is there. Some of the other things I want to point out here is, well, we do have a sell-off in the markets of at least 2%. We're usually up 1% the next day, and then eventually within a month or 2 months, we end up actually closing up most of the time in the S&P 500 rather than down. So we had that sell-off. It doesn't mean it's the end of the world. Typically, we end up having good 2 to 3 month periods. Even anything above 2 months here is at a probability of around 85% that we're going to close positive. The only times we've seen the opposite is 2021. Where is the other one here? 1999. So around that dot-com period, and the 50s and 60s. So if we're looking at the most recent period, it's really just 2021 that proves the opposite. And it would have to be, let's say, something considerably significant in the macroeconomic, from a macroeconomic point of view. We also have a situation where stock valuations are quite high, so we have to be mindful of these valuations. This is a snapshot of a graph that I took a couple of months ago, and this is even higher right now because of the market moving. We've got PE ratios at these high levels. What JP Morgan and other investment banks are saying is that with PE ratios at these levels, we're more likely to get 5-year annualized returns that are quite low, and maybe we get a lost decade of a sort. And I think this is probably going to be a very likely scenario after this year. And it probably gets triggered around mid this year. We would get a trigger in this kind of market. The Russell keeps ticking up, so maybe we get that final move in the Russell. The only thing I would say here is, if the Russell ticks up like this and we end up getting a nice move, it could actually last about a year or so. So maybe we can even go up until late this year, early next year, before we end up seeing a drop off in the Russell 2000 versus the S&P. But at the moment, it's looking quite good here. On this breakout, it's looking quite nice with the rotations into the Russell and the small caps. It's just been very, very volatile because of tariffs and other factors. So even if you did trade some small caps, unless you traded the index, you might have been flushed out by some volatility. Let's see some other charts I want to share with you guys. Silver and gold. So when we look at silver at these high levels, yes, it can go a little bit higher here on silver, but we're really getting into dangerous territory with silver and gold. I think it's very, very euphoric, and it will only end badly for anyone buying at these levels and looking for long-term investments. As a trader, of course, you can take advantage of these on the short-term and mid-term levels. We here, my community, we're definitely taking advantage of these, and we've seen some significant returns in silver plays, gold plays, both in stocks, but also trading silver and gold by themselves. But being above the RSI 50 level for 52 consecutive days usually ends up triggering some sort of sell-off, and it's happening here right now, and it's well above this level now, because this was in November, so we're really entering here these euphoric buying levels. Similar stat here with gold as well, and where we end up, we usually get sell-offs 3 weeks, 2 months later. So we have to be very, very cautious in terms of where gold will go. Gold looks a little bit weaker than silver because of, I think silver's getting some sort of revival as an industrial metal, and it's being talked about a lot. So we're probably going to see silver doing a little bit better than gold, but gold will probably be the reason why we end up selling off it. Overall, let's look at some charts as well. When we look at the S&P, I've mentioned this a number of times, but I've drew this around December as a potential scenario, and we are now seeing this this downward move. Yes, it didn't go to 7.1k. We do also have a channel here that's holding, so it's held on the top side quite a few times or within it, and then we have this lower bottom level that we need to hold through. For me, if we break this level and we go back down, the likelihood is that we go back to the base, which is 6.5 and 6.7. Very, very likely that we go there if we do break this level. And that really means that we get I think it's a 5 to 10% move. Let's have a look here. So from the high, it's around 7%. So in between what I mentioned. So yeah, we can end up getting that kind of move. That is a significant dip in the markets, and I think it's probably going to be a buying opportunity. When you think that the markets did extremely well from April onwards, yeah, it makes sense. And then when I look at the weekly, it looks like it needs a dip, and it looks like it wants to come down to this 6.5 zone around this level here. That would be the most logical level and support zone, in my opinion. And it's what I'm looking for if we do get a bit of a sell-off here. So far, it's holding up, and it's being bought around the 10 and the 20 EMAs. It's looking quite comfortable, but the curvature of this move, the fact that we're getting less momentum and less strength, shows to me that either we're getting rotations, which we have done in the Russell, or we're on the verge of a significant dip, similar to this one. I'd probably say similar to the July 2024, or maybe this one would be huge, and there would need to be significant reasons for this move. But similar to this one here, July 2024, would be a nice move that would give us opportunities to reposition and buy on the swing up again. The NASDAQ, very similar here, but the NASDAQ has looked even weaker. So we had a higher high on the S&P, but a lower high on the NASDAQ. And again, it's looking quite weak for that move. For me, I'm watching it very carefully. There's a bounce here on the 20 EMA on the weekly. Looks quite good, but we broke before and we came back down. We broke up again here around this level, and let's just see whether today it has that follow through. Like I mentioned earlier in the episode, we have the mags doing quite well here, and I think there'll be a rotation in the mags, And yes, maybe we get a bit of a run here on the Magnificent 7, Magnificent 10, whichever one you look at. And that run will probably go all the way up to the recent high, maybe a little bit, create a new high. If the momentum fails, then we are really in for a bearish move. It looks okay. I would say that if the momentum really follows, we go to the 27.5 zone. That's my opinion, based on what my chart's showing. The Russell 2000 has been doing quite well here. So if you look on the daily, nice move. And we're due a bit of a dip. So that rebalancing of moving from small caps to the large caps, the MAG 7 or 10, is quite logical here and very likely, in my opinion. Gold chart, just to see here where we are. Again, another big day on gold. We end up going to 5.1K. Some of my community members that are trading this, they think that we'll go all the way to 5.2 and then we sell off. So 5.1, 5.2, that's where we are right now. Silver, extremely good today as well, but it's going to be dangerous. I think a lot of people are going to get burnt on this one. And I feel like we could come back down all the way to 90 quite quickly as it consolidates on the weekly and on the monthly charts, because this will not last forever. But let's see. Okay, crypto, really quickly here with crypto. We had a further sell-off here. So since we broke down below this trend line, which was actually my final level, or the day before, it was actually the final level of my long position, which I opened around 89. Since we broke down below that level, we are leaning short and we are continuously finding resistance here. So we move up a little bit, resistance, come back down. We could move back up to this level here, which is a trend line that broke yesterday, test, and then move a little bit further down. I'm looking around this level for the buy up once it consolidates. We do also have potential here for consolidation around the 82, 83 level. But yeah, it's looking like a slow sell-off or a consolidation here before we move up higher. I think without moving to 102, 107, maybe even as high as 117, we're not actually going to get a weekly trending move on the short side. So although we are short on here as well, because of the shift that we saw, the break of the trend line that we saw on the week of the 3rd of November, I still feel like we are consolidating here. And maybe this is what I'm looking at on the weekly. We're doing a bull flag on the weekly before we go a little bit further down. It is looking weak, so if you're taking positions, the best positions right now are the shorts. It's found resistance on the 20 here as well. It's continuously finding resistance every time it tries to move up higher, so it's worth monitoring on the downside. With Ethereum, I like the fact that we retested this zone yesterday, so we're actually doing what I expected, which was, I drew this for the community members, a slow descend here as it accumulates, then a shift in momentum around Feb, maybe at the beginning of Feb or mid Feb. I think it's probably more like mid February. Yeah, it's looking like it wants to move a little bit further down. It will be a slow grind, I think, because it's still accumulating here, and it's worth just noting that I feel like it will accumulate. Yeah, it could go a little bit lower if there's some macros that drive it, but overall, it's looking fairly good and stable and worth holding the short side, and then monitoring the upside here or the long for the final accumulation zones, and then buying the swing up. I think the swing up for me is the most appealing. The risk reward ratios are much better. Seeing as I didn't trade this zone here or the sell off, it does not make sense for me to sell here when it's in that accumulation zone. So I'm looking for potentially something like this. This would be an ideal move for me with a 1 to 10 all the way up to 4.5K. And that will take Bitcoin to 110 or 117 if we go to that level. If we don't, then we're looking at 1 to 6 around this level here. This is what I was targeting on my long, and we end up failing on that one and only making 4% on Ethereum, which is fine. Small profit. I'll take any profit I can get. And once we get a really nice swing up, we'll be making 30, I think, to around 50% on this move. Just a matter of waiting and timing it to perfection. Okay, so that's it for today. If you guys enjoyed this episode and you want to become part of the TrendHunters community, follow the link below in the description of the video. Join. I provide my watch list every day, my market analysis every day, macro analysis every day, and many, many other things that I provide there to help you guys become profitable traders and learn about building swing trading portfolios that will outperform the markets. Last year, I did 64% in the US Investing Championship, and this year we're around break even. Even though we were up around 10%, we're around break even because the market has been very, very volatile. But managing risk is the key here. And you learn a lot about managing risk, a lot about building portfolios, and what I'm watching every day in terms of macros, but also actual ideas. Take care, guys. See you tomorrow.